In this video, I'm going to talk about how you can start or improve your credit score so that you can be approved for a loan with the best rates. So stay tuned. Hey everyone, it's Hazel Gacula. If you're new to the channel, don't forget to like and subscribe. I'll be posting up more videos about real estate, money, and mindset. So let's jump into it. First thing you need to know is this. This gives you a breakdown on how your credit score is calculated. And just knowing this breakdown will help you make better decisions so that you can build your credit score to a higher score. So make sure you take a screenshot of that or print it out. With that said, the fastest way to jump up your credit score is become an authorized user. So find someone with good credit and become an authorized user on their credit card, preferably 2 or 3. If that person doesn't trust you, just let she or he know that they don't need to give you the credit card. They can just hold the credit card. But as long as your name is authorized to that credit card with the person with good credit, your credit score is going to jump up. If not, don't worry about it. You just have to start building your credit as soon as possible because you need time to build your credit history. Because the age of your credit makes up 15% of your score. Usually you'll see your credit score jump every 3 months. If possible, try not to close any accounts because lenders like to see a long history of you maintaining your account. The longer you have credit, the easier it will be for you to get approved. So if you're young, make sure you start now. So this is what I did after high school. I went to my credit union and I asked them, hey, I want to start building my credit. What type of loan can I get approved for? So they asked me for my 2 pay stubs and confirmed my identity. That very day, I got approved for my first personal loan, and that's when I started my credit. Now, if you're young and wild, don't go spending that $1,000 on nonsense stuff. Put that money on the side and use that money to pay off your loan. A few months after that, I got my first credit card. And then a few months after that, I got approved for my first car loan. Having different lines of credit like credit cards, car loans, home loan, personal loans, that can also help build your credit. This is what you call credit mix, and that makes up 10% of your score. And make sure you do your research on what credit cards to apply for so that you're not getting denied and hurting your credit. That's right, if you keep applying and keep getting denied, that will hurt your credit. And be careful, don't just apply for any type of credit card that you don't need because any new credit will drop your credit score, especially if you're applying during the same period of time. During these holiday seasons when you're shopping around, if you go TJ Maxx, GameStop, or Macy's, they're gonna ask you, hey, you want 10% off or 20% off? And you're like, yes, I love discounts. And then they're like, great, here's a pen and an application. And once you see them ask for your social security number, stop and think twice because you are about to apply for a credit card. Anytime they pull up your social security number to see your credit score, that will hurt your credit. So think twice, do you really need that credit card? Do you really need that 10% discount to buy this $50 game? Do you really need 10% off to buy this bathing suit at TJ Maxx? So just think twice. And let's be careful, guys. Don't just apply for any type of credit card that you don't need because any new credit will drop your credit score. And new credit makes up 10% of your score. Research has shown that opening up several types of... Seriously? Don't mind that guy. Research has shown that if you open up several accounts in a short amount of time, that will represent as a greater risk to lenders, especially if you're just starting out getting your credit. So try not to open up too many accounts rapidly. Ideally, you would want to be spending under 10% credit card utilization. For example, say you get a credit card for $1,000. 10% of $1,000 equals $100. So you would want to be spending $100 or less. The amount you owned takes up 30% of your credit score. If you max out your credit card and spend $1,000 buying a TV, you are using 100% utilization, and that will hurt your credit. If this is you always maxing out your credit cards, try calling your bank to see if you could get a credit increase. This will give you more freedom and a better safety net. Because the more utilization you use, the more it will hurt your credit. Again, try to stay under 10%. All right, so the most important factor of your credit score is your payment history. And this takes up 35% of your score. And this is the first thing that lenders look at when you're applying for a loan. They want to see if in the past, were you making on-time payments? And how long were you making on-time payments? Always make on-time payments and make sure you pay it off every month. Now, if you can't pay it off every month, that's fine. Just make the bare minimum payment, which is usually around $2,200, and then do everything in your power the following month to pay off the balance. This is what I always do every time I open up a new credit account. I always set up my auto payments because you don't want any missed or late payments on your records. Alright guys, that's a wrap for today. If you like this video, don't forget to like and subscribe, and make sure you hit that notification bell. And if you have any questions or you just want to connect, here's my Instagram. I'm pretty active on there. And while you're at it, follow me on the rest of my social media. And I'll see you guys on the next one. Take care.